There's a paradoxical truth in the world of investing that almost everyone overlooks. We spend hours researching charts, analyzing financial reports, tracking news by the second, and praying for the market to move in our favor. We view the market as an opponent, a wild beast to be conquered. All our fears, all our anxieties are directed outward. Is the market about to crash? Will this stock plummet? What if interest rates rise? But today, I want you to try something different. Pause looking outward and turn to look at yourself. Look at the person holding the phone, clicking the mouse, making those decisions. Because after all the analysis, all the data, your worst enemy, the only thing that can destroy even the most carefully laid investment plan, is your own brain and heart. That's right. An investor's greatest enemy isn't a recession, bad news, or even a scandal. It's what happens inside you. The haunting fear of loss, bottomless greed, the ego that wants to prove itself, and the impatience wanting everything right now. Meet my friend Mark. He started investing in 2017. Everything was beautiful. The market went up, his portfolio was green, he felt smart, a latent financial genius. He started talking about investing at every party. Then, in the fourth quarter of 2018, the market corrected sharply. His stocks, the companies he believed in, plunged 20 to 30%. At first, he tried to stay strong, but every time he opened his trading app and saw red, that sick feeling returned. His friends called, "Sell, Mark, get out while you can." The media was relentless about trade wars, and one morning, in a panic, he sold everything. He escaped with a 25% loss. He sighed with relief. Even though he lost money, the psychological torture was over. And you know what happened next? Just a few months later, the market recovered all those losses and continued climbing. The stocks he sold doubled, tripled in the following years. Mark didn't lose because of the market. He lost because of the fear inside himself. The enemy was that feeling of panic, not the chart. This is the first enemy, the fear of loss. Scientists have proven the pain of losing $10,000 is twice as powerful as the joy of gaining $10,000. In investing, this is a disaster. It makes us sell in a panic to avoid immediate pain, missing out on massive long-term gains. It makes us hold on to losing stocks, hoping for a miracle to break even, instead of cutting losses and moving to other opportunities. We no longer make rational decisions, we're just running from pain. But fear is only one side of the coin. The other side is more dangerous because it disguises itself as opportunity. This is the second enemy, greed and FOMO, the fear of missing out. Have you ever seen a stock jump 50% in a week and kicked yourself? Why didn't I buy? Then you jump in at the peak, hoping it will go up another 50%. But usually you're buying when everyone else has taken their profits, ready to welcome you at the first stop, a correction. FOMO makes us abandon all plans and criteria to chase what's hot without understanding what we're buying. We're not investing anymore, we're gambling, hoping for quick money. Greed whispers, just a little more, let it run, and we never take profits, watching them evaporate. Then comes the third enemy, the most subtle and hardest to recognize, your ego. We tie our identity to our investment choices. Buying a stock no longer becomes a transaction, it becomes a statement. I am smart, I have vision, I am right. And once the ego is involved, we can't admit mistakes. Admitting the stock is bad is admitting we are bad, so we find every reason to justify, hold on, and refuse to face reality. We scour forums for comments that agree with us, ignoring warnings. This ego also shows in wanting to beat the market. We're not satisfied with a steady 10 to 12% return from an index fund. We want more to prove we're better than the crowd. And that useless comparison, that competition, leads us to unnecessary risks.
So, how do you fight these inner enemies? You can't destroy them. They're part of being human. But you can build a defense system, a mental framework to neutralize them. I call it building a mental position, as solid as a position in your portfolio. The first pillar of your mental position is to write your plan before you feel. This is your most powerful weapon against emotion. A plan isn't, I will buy stock ABC. A plan is a set of instructions for your future self when you're scared or greedy. It must answer how long you expect to hold an investment, what would make you sell it, what maximum loss you can tolerate, and when you will take partial profits. When you have this plan on paper, created while clear-headed, you've given a task to your rational self. When the market moves and emotions surge, you don't need to think. You just open the plan and follow it. You've separated the decision from the emotion. The second pillar is to focus on the system, not short-term results. Think of a basketball player. He can't control whether every shot goes in, but he can control his system, practicing 500 shots daily, eating right, sleeping enough. With a good system, success rates follow. Investing is the same. What's your system? It could be consistently investing capital every month, automatically buying a quality asset like a broad market ETF, and never stopping no matter the news. If you believe in that system, then a 3% market drop isn't a disaster. It's a day in the system. It's like a rainy day for the basketball player. He still practices. Judge yourself by whether you follow the system, not by today's account balance. The third pillar is to schedule regular check-ins with yourself. Every quarter, spend 30 minutes not to check profit and loss, but to ask yourself questions. Recently, have I made any decision based on emotion, like fear, greed, or pride? Am I following the written plan? Am I comparing my results to others? This self-dialogue is the antidote to ego and impatience. It returns you to the controller's seat. Finally, remember this. The market is a giant machine reflecting all the information and emotions of millions. You can't control it, but you can control the one thing that matters, your reaction. When bad news hits, what's your default reaction? Open the app and sell? Or open your plan and reread why you invested? When you see others making money from something, is your reaction to jump in or to check if it fits your system and criteria? Victory in investing doesn't come from predicting every peak and trough. It comes from not defeating yourself. It comes from recognizing the true enemy hiding in your mind and building a mental fortress strong enough to withstand it. Today, right after this, I want you to do one simple thing. Take a piece of paper and write the title Mental Rulebook for your name, the investor. Below it, write down the 2 to 3 biggest emotions that usually lead you to poor decisions. For each emotion, write one specific action you will take when it appears. Let that paper be the commander of your rational self, because when the emotional storm hits, you won't be fighting alone. You'll have a plan. If you want to dive deeper into building a practical investment system to support this resilient mindset step by step, check out our previous guide on how to start investing without panic selling. The link is here and on the screen. And if you want me to analyze other psychological traps like confirmation bias or the illusion of control, let me know in the comments and hit subscribe. Remember, the market will always be a volatile place, but those who control the enemy within will always find a way to weather any storm. Stay disciplined. I'll see you in the next one.